What's up, everybody? It's Connor Tuck here, and today we're going to be talking about title. So inside of a real estate transaction, you generally have your big three. You have the realtor, you have the lender, and you have title. And a lot of times I sit down with people and they say, do I need title? Is that something I have to do? I should do? What even is it? So I have with me Bredan Carey from Core Title right out of Southern New Jersey here, who's going to hop on. And we basically are just going to rip through about 10 of the most common questions that people would have about title. So you actually kind of understand what it is you're getting into. So I'm going to jump right into it. And Bredan, go ahead and answer this first question as well as give us a little bit scope of yourself. What is title insurance?
Well, first of all, I want to say thanks for having me on. Like Connor said, I'm Bredan Carey. I'm with Core Title right out of Mount Laurel. It's funny. It is a necessary evil in the real estate transaction. Like you said, it's the realtor, the lender, and title. We all kind of make up the real estate transaction, buy and sell sides. And people aren't familiar with title insurance. They know they need a realtor. They know they need a lender unless they're buying cash. And unless their realtor or lender educates them that they need title insurance, they don't really know what it is and what it means. And I think that's why we're here today, is just to shed a little bit of light on what title insurance is. So there are two different types of title insurance that you can get. You can get owner's title insurance or lender's title insurance. Almost on all transactions, you'll have both of them, but you do need lender's title insurance on anything that has a mortgage. So if you have a cash deal, you don't technically need it. We always would recommend that you get it. It's just protecting you. Lender's title insurance is going to protect you on anything that's coming prior to you acquiring that property. So owner's title insurance is going to protect you on anything that comes after. There's a lot of times we get kind of brought in right once things finish being under contract. A lot of the times I like to get involved as soon as you're actually working with these buyers or sellers, so I can kind of educate them on what I do and how we're able to help them and protect them from issues that can arise in the future if you don't go ahead and get title insurance.
So my limited scope, before I've obviously been doing this, for a number of years here at this point, but before I got into it, I was like, title like a car, like I'm taking title of the property. And I guess there are some crossovers, but what we're really talking about is when I buy my home, there may be liens, there may be judgments against the previous owner. And I want to make sure that title uncovers any of those potentially problematic issues and protects them, not only, like you said, for the potential owner moving forward, but if you have a mortgage, it's really a risk mitigation for the lender. And I think it is mandatory, right? If you have a mortgage, you do need to do at least a lender's title policy. Is that correct?
Correct. Yeah, that's essentially protecting the lender foremost, more than anything, if you really think about it, because they're the one, you're buying the home, but they're really the one that's giving the money out, right? So they're really the one that needs the most protection in that situation.
Okay. So let's start going into some more of the specifics then. So sure. I get under contract, I send the contract to my lender and he's going to start underwriting it for their side. And I also send the contract to you guys so that you can begin your title policy. Can you explain to me sort of what is covered under that title? And is it just title? Is it title insurance? Give me kind of the right terminology to even talk about this appropriately.
Yeah, it would be title insurance. And just to kind of walk you through the process as if you were a buyer and you weren't knowledgeable. So once you got me involved, what I'm doing is, if you're the realtor, I'm going to get information from the realtor. There's going to be an intro email, right? So you're going to send something out to me saying, hey, congrats, we're under contract, we're finishing up attorney review, what have you, whatever time frame that is. Here's everyone that's involved in the transaction. Here's my information, my transaction coordinator, my co-op agent, the lender, maybe the attorney, anyone that could be involved in that transaction, the buyers and the sellers, right? So we're going to group everybody in and we're going to start the title search. So what we're going to do is we're actually searching two things. We're going to search the seller, the actual person, and the property. So maybe we're searching a John Doe and we're searching a 123 Main Street in whatever town. So those are the searches we're going to do. We're going to be reaching out to the townships. We're going to be looking up people's history from the start of that property. So the purpose of us doing that is when you, Connor, if you're going to buy a property, we don't want you to accrue any other debts, essentially, right? So if you're going to buy a property and there was one the other day with a solar issue, There's so many different things that can come up, but I'll talk about one specific instance where there was solar attached to a property. And I think if you're knowledgeable about solar, there's so many different ways that you can get solar on your property. But something came up and we're going to pool any debts attached to that property, right? So if someone's leasing something for 15 years and they're only 1 year in, they may have 14 years worth of payments to really pay that solar off. So we would do something and we would search up any debts attached to that property. There may have been a large sum attached. We paid off that month, but the full amount was not paid off because of certain language in the contract. So what we like to do is just make sure all of our ducks in a row, make sure everything is paid off. Because again, if you're not getting this and you purchase a property and there is $10,000, $15,000, $20,000 worth of bills attached to that property, hey, if you have to take that on, right? So essentially what happens is you get title insurance so that you can ensure that you're not having to take on any extra debts that you're not already agreeing to take on. So we're going to stick with this same example. Let's say you got lender's insurance, didn't get owner's. You end up having to get into a legal battle with a solar company because you purchased a home, the solar is attached to the home, right? But there's a $14,000 unpaid balance. When you have title insurance, you're protected from accruing that debt. Now, if you didn't go ahead and purchase that insurance, what happens is you are liable to actually go ahead and pay that $10,000, $15,000, $20,000. So that's why it is important to go ahead and get the title insurance just to make sure you're protected, right? Look, you get insurance for your car. You get insurance for your homeowner's insurance, right? You could have a flood in the house. You want to protect your most important purchase. And I think that's why it's really important to actually get involved with your title person or company before you go under contract so you can learn more about the process.
So, and you keep saying insurance, and my mind keeps going to, all right, well, I have homeowner's insurance, I have car insurance. Most of those are only good for a certain period, and then I have to renew it. With title, is it a forever thing? Like once I buy it, it's forever? Or is it kind of for a period of time where a majority of the claims come in? Is this something I have to like renew my title insurance every year? Just to stay within the timing silo, like just walk me through this timing.
Yeah, no, it's a one-time purchase, which is great. You don't have to renew. We're essentially going to insure you. Like I said, the lenders is prior to the purchase. So anything that happened before you accrued this property, and the owners is going to be going forward. So that could be an instance where anything prior could be, even something as simple as child support, unpaid child support attached to a property, which we see often, has to be cleared out. Something going forward in the future with an owner's insurance policy could be, there could be mineral rights on a property going forward, and the government wants to come and do some excavation on your property. And it's just essentially protecting you from anything prior and in the future. But it is a one-time purchase, so you don't have to pay for a policy every year like you do or every month.
Okay, so that's good to know. And you're kind of leading me to my next question here, because it was obviously about, well, every insurance costs money, right?
Yep.
And I think, as a realtor speaking to buyers, when we sit down for a buyer strategy session and I say, okay, well, here's the money that you're going to need for your down payment, and here's the money you're going to need for your closing costs. And you get that, oh, what are closing costs? Well, it's made up of a couple different things, but one of the largest components of a buyer's closing costs can sometimes be the title fees and some of the fees that they have to pay for this policy. So we don't have to get into like the nitty gritty specifics of pricing and all, but give me a rough estimate. Like what should somebody be expecting whether it be a percentage of the sale, a flat amount, like give me a ballpark to work in to understand the cost of this.
So it's really hard to pinpoint a number, and I wouldn't want to mislead anyone by saying, this house would be this dollar amount. It's going to be done state to state. We are regulated by the banking and insurance industry. So we do have fixed pricing. So that is the good thing with title insurance is you're going to want to work with someone that has a good reputation that you can trust and good communication to get you to closing, because realistically we are plus or minus $100 from company to company. One of the benefits of working with us though, or any good title insurance company would be that we have a title insurance calculator on our website. So I always encourage the agents and lenders that I work with to familiarize themselves with it. But for me to generate a quote, it takes literally 1 minute. So all I need is a few pieces of information. I just need the property address. I just need to know if it's going to be a cash deal or a finance deal. or if it's a refinance. And then I just need to know the sales price and the loan amount. So as long as I have those few pieces of information, I can generate you almost all of our fees and closing costs. Obviously we'd have to work directly with your lender to get their fees, but we can give you all of our title fees within a minute or two.
Can I ask you to corroborate maybe a crude estimation tool?
I could do one while you're speaking for one moment and give you some hard numbers and give you.
All right, you want to run this at the same time? All right, yeah. We're going to use a $400,000 home.
Yep.
It will be financed, right, and things like that.
Sales
all right, yes. Let's just do there. Let's just do a $400,000 financed one.
And you want to do 20% down? You want to say they're low?
Yeah, we'll do 20% down. Yeah, that sounds good.
Cool. I'm just going to pick a random location. I'm just going to do my old house in Cherry Hill. Let's see what this is looking like right now.
And remember, this is for a buyer's side.
Correct.
Policy, right? We're talking almost exclusively on the buyer side right now. Yep.
Yep. The cool thing is, and I'll pull my phone up if you can see briefly, but it shows you the buy and sell side where the fees are. So it breaks everything down for you. And on a $400,000 home with $320,000 financed, the buyer would pay roughly $3,111 for the title side. And actually almost $300 of that is just deed recording and mortgage recording fees. But it does spell everything out for you. It tells you the cost for the owners and the lender's title insurance, the actual cost for the closing, endorsements, different fees, notary fees, wire fees, the county searches, because when we're doing these searches, we have to reach directly out to the county. They have to go through the records again from the time the property started, so there's a lot of searching that goes involved. There's a lot of paperwork, but as far as I would say, realistically, if you're in New Jersey, the average $300,000 to $400,000 home should be no more than $3,000 to $4,000 in title insurance. I would say probably less. One of the great things about us as well in this calculator is we always overestimate. So if you see $3,111 here, you won't see more than that. You'll always see a little less, because we'd rather cut you a check back at the closing table for whether it's just a couple $100 rather than say, hey, I know you already came with this money prepared for the closing today, but it's actually going to be $207 more, right? Wouldn't you rather under promise, over deliver rather than lead this high life and then ask for more money?
I completely agree with you. And I think, one of the things the reason why I specifically said we're focusing only on the buyer side policy is technically you can do a seller side title processing. Can you explain the difference a little bit to me? Like, I understand as a buyer, okay, I'm about to buy this house, and I want to make sure that no previous debts I'm going to accrue and I'm going to take on and any of that, and obviously going forward. But as a seller, a lot of times we reach out and we have a title company handle the seller side of title processing. Is it the same thing? I mean, is a seller also buying an insurance policy, or what's the biggest difference you can tell me between like what a buyer title insurance policy is versus running seller side title processing?
Yeah, it's a little different. It's funny. I'm looking at the costs here, actually. Like I said, the buy side was roughly $3,100 and the sell side is roughly $3,600. But when you look at the bulk of what the cost comes out to, it's the realty transfer tax, $3,200 for the realty transfer tax. So you're not really going out and getting a policy. So again, I'm going to show you this briefly, but if you take a look, you can see that it says owners and lenders title policy, and there's a number attached to it. When you look on the seller side, it's not there because you're not really purchasing that policy. You're essentially just using the sell side conveyances to help facilitate the sale of your property and to help push things along and keep communication going strong.
Yeah, and we are, both of us, I'm licensed, I know you are too, in both New Jersey and Pennsylvania. When we talk about the transfer fee, it is in both states. It's kind of done a little bit differently in both states, but I agree with you. I mean, the lion's share of the seller side, and here's the crude example I wanted to see if you could corroborate a little bit. As an estimation, when we talk to a seller and we're working on like a seller net sheet to calculate what may be the equity they're going to walk away, when we start to say like the title policy for a seller, if you're under the age of 62, so you're kind of a normal age range, we recommend about 0.85% of the sales price is what you'll spend on your seller side. And if you're over 62, meaning you qualify for that senior citizen discount with the transfer fee, we recommend somewhere about 0.65 or 0.6% of the market value. Now, again, that's very crude, but would you think that that's somewhat accurate?
I would say if we're focusing right now on PA and Philadelphia, while you were speaking, ran the same numbers actually for $400,000 purchase price, $320,000 loan amount. And it's really interesting to see that a buyer's title policy on that same property in the city is going for just south of $13,000. So here's what makes up the bulk of that. I'm looking at a municipality transfer tax here of just under $7,000 and the deed transfer being $2,000. So almost $9,000 of that $13,000 policy is just recording and transfer fees. So it's just different depending on what area you're going to be in, and municipalities, it can really kind of hit you over the head with the transfer tax and the deed transfers. It can be expensive when you're starting to get into the cities.
Well, and one of my things too is, we live across from where we are. I mean, Burlington, Camden, Gloucester counties. I mean, we're a stone's throw from Philadelphia. So the fact that within 7 miles, you can have such a huge difference in what you would expect a closing cost, I kind of agree with you. I mean, before you start a lot of this, you should try and get a pretty good estimation of what this is going to be, because you may have said, oh, I'm really looking forward to putting a 15% as a down payment. And then depending on where you're buying, you may say, hey, I may need more on the title policy, for whatever it is. I may only be able to do a 10% down, and I may have to use those extra funds towards the title part. So it may even affect the type of loan that you'll get or the type of property you may approach based on some of that. So, all right, so I want to keep going down here. So it makes sense kind of why I need it. It makes sense sort of what it costs and how to arrive at some of those prices. But let's say we are doing the title search and there's an issue that does come up. What happens? Just something comes up, and we could use a solar example or another example. What is it from the title side that you begin communicating, and what is the kind of result that you're hoping to achieve?
Essentially, what our processors are doing is we're searching with the municipalities or their counties, whomever. We're pulling up any debts or anything attached to that person or property. Again, we're just trying to protect the buyer from accruing any of these debts. So once we're getting this title report, our examiners and our searchers are going to comb through this and see if there is anything attached to that property. And we're essentially just trying to find payoffs. Again, there could be a certain debt attached to the property for $6,000. There could be a second mortgage, right? Whatever that is, we're just trying to work directly with the buyers of the home, the sellers of the home, the agents, anyone involved in the transaction on getting these debts or liens cleared. We're essentially just handling payoffs. And once everything is free and clear, then the buyer can go ahead and purchase that property. We normally won't even get the clear to close from the lender side until the title reports are clear, because we have to work directly with the lenders. We have to match numbers with them. So that's kind of how that would take place.
Do buyers ever handle any of those payoffs? I mean, obviously, if it's a seller debt, 99 times out of 100, I would assume the seller is probably the one who should be paying for that, will be paying for it. Are there ever situations where you get to the end and you're sort of right there and you're saying, hey, look, in order to move forward, this $3,000, let's just use a small example, a $3,000 issue, seller doesn't have the ability to pay for it. Buyer, if you want this house, you got to pay. Does that ever happen?
That's a great question, actually. And I want to answer this generally by saying the majority of the time the seller is clearing their own debts, correct? But like you said, there may be a financial situation where they cannot afford to clear those debts. And if the buyer is interested enough or motivated enough to get that property, they will then work something out with either the realtor, the seller, the lender to find a way to clear that debt, right? Because let's say something is 10 grand. 10 grand is a lot of money to a lot of Americans, right? And if we can go ahead and say, hey, I'm willing to spend $3,000 as the buyer to help you get there, like what work can you do? Like we need to meet in the middle. And again, that's why it's important that who you work with matters. You want to have a great realtor supporting you. You want to have good lenders. If there's an attorney on the deal, they're going to be able to give you the logistics and legalities on what you can and cannot do. But I think as long as you have good people around you, you'll see that you can problem solve and come up with different solutions to unique problems.
All right, so here's one for you. Let's say it was kind of these past couple years, right? So somebody maybe bought right in COVID. They only bought 2 years ago, and now they're selling. In my thoughts, there's not a lot that could have happened in that. I mean, I guess technically there could have been a lot happened in those 2 years, but can I just sort of transfer the policy from the buyer who bought it 2 years ago? Like, do I have to get a whole new policy? Is there any transfer of these policies, or really any time you exchange ownership, a new policy has to be generated? Is it more the latter?
Yeah, no, there's not really a transferring of policies. I've been in this industry just finishing my 3rd year now, coming up on March, and there hasn't been any transfers. I guess that's a good question for me to educate myself on. But to my knowledge, being around 95% sure, every purchase or refinance that I've seen, no matter the time frame, there's always a new policy issued again, because even though not a lot of time may have elapsed, you're still doing a search on the actual property address and the person. So much time hasn't elapsed on the property. But let's say, again, you buy a property, that person could have some judgments against themselves, right? So it's really not the property that the short amount of time is the issue. It's really the person that bought that property could have some debts attached to their own person, not the property.
I'm thinking, obviously, during COVID, if you had that, maybe you racked up 60 grand in medical debt, right? Maybe you had big issues. So yeah, no, there's no ownership issue with the property. It's not like some uncle is coming out with a half-cracked deed saying like, I own this property. No, It's more about there are other things with that person that could be leaned against the property in just a short period of time. And I was about to ask you the same question, but about, refinances. I'm like, it's the same owner, it's the same everything. But like you said, from the time they bought it until the time they're doing this refinance, there's a lot of differences in their financial position that could have happened in that period of time. And so you would still need a new policy, even though you're buying it from, not buying it from yourself, but you're refinancing the financial terms of that. But the lender needs a new lender's policy.
That's actually exactly what it is, though. It's really not to protect yourself from yourself. It's so the lender can have protection against their money, right? Because ultimately they are the one funding the purchase of your property unless you're buying it cash. So yeah, it's really to put safeguards in for the lenders so that their money is protected.
All right. So with car insurance, right? I can get that like $1 a day insurance, or I can get, the top coverage, and then I can get every version of that leading into it. Right. Is there the same thing with title insurance policies? Like, can I get a basic title insurance policy and then like a premium one, or is it most of the time pretty much all standard?
No, it's a one size fit all. I mean, there's the two policies that you can get is owners and lenders. When I'm describing title insurance to people, I'm not saying, hey, this property needs all the bells and whistles and upselling people. It's just, you need it. Costs are regulated. Let me explain to you in detail what it is, because, no one ever thinks they need insurance until they need it, right? Like, no one wants to pay $350 a month for car insurance, but when you get in that accident and you get a $20,000 bill, your car is totaled, you appreciate having insurance. And it's the same thought process for anything. If you're in your house, your hot water heater goes, you're glad you had that homeowner's insurance. You don't need it until you need it, right? You're not going to need title insurance until somebody comes up and says, hey, I actually was the ex-wife of John Smith and he sold this property without my permission, and now I actually have rights to this property. Well, if you have title insurance, you're covered. Title insurance is really covering you for any type of issues that can arise. And just if something does arise and you have title insurance, then it's on the insurer, not the person.
So that's actually kind of one of my last questions here is, let's say that scenario you just mentioned, like the ex-wife or the ex-husband or whatever, property was sold without them knowing, and really they needed to sign these contracts to do that. I guess the first question would be, how would we have not known that, right? How would we have not known that there was an ex-partner, especially if it was a marital property or something like that? So I guess there's already some parts of this theory that we're kind of debunking, because a normal search would have probably recognized they needed to be on these contracts in the first place. But the bigger question, and this is the one I'm asking, is, let's say that happens, right? We move into the house, we're super happy. 2 months later, we get that phone call. What do I do?
Yeah, the first thing you're going to want to do is call your agent and your title partner. It's going to be a legality issue at this point, right? And that's why you've decided to work with our company versus another's, because we would not have missed that stuff, right? Like that's an easy one. When someone's married, you're looking up for partners. If someone's divorced, you're making sure that they don't have any rights to the home. There's just pretty easy checks and balances that when you're looking through a property, it's like a checklist. You're going through each and every one, making sure that we've done our due diligence to make sure that there's not going to be any mishaps. And if there are mishaps, like I said, we're getting to that point. Go ahead, Connor.
Well, I want to bring you a scenario about that happened to me. So I was representing a young lady, and the whole time we're going through this, she's single, she's single, she's single. Well, we get to the closing table and we sit down and we start saying, and we're going through the lender policy and things like that. And the lender confirms, you're not married, right? And she goes, I am married. We look at each other like, what are you talking about? She goes, I got married 2 days ago. But she's hiding it from her family. So she didn't tell anybody. But technically she's married. And in New Jersey, we're a marital property state. So if he were to spend one night in her home after they're married, he owns 50% of that property. And so in a situation like this, where she went and signed those contracts and signed everything without him being involved at all on the deed or anything, now technically, and she said, well, he's never going to really live with me. And all of a sudden, these bells and alarms are starting to go off for me. And I was like, look, your business is your business. You should probably talk to an immigration attorney about what you're doing here. But something like that did happen. So I guess as we go through this and as we're kind of wrapping up for the day here, things can happen. But as we're teaching the public here, as we're explaining what should you do, immediately just talk to your realtor who's kind of been quarterbacking this whole transaction. And like you said, your title partner. Just get them involved immediately. They will know what to do. They'll know how to advise you, and they're looking out for your best interests. All right, Brendan, last question.
Yep.
Since prices are state regulated and there really isn't that much of a difference from a cost perspective going from ABC title to XYZ title, why would I use this company over that company? Does it really matter?
Yeah, I mean, there's a tagline that I think most realtors live by. It's who you work with matters, right? And that's the same for your local lenders and your good title partners. The thing for me is I apologize, I just got a call. The thing for me is I try to lead with value. So what I do is I meet with people. I try to figure out how I can help them. Why you would work with my company rather than just me is take a look at our Google reviews. We have a great culture that we've built. We have a good brand that we've built. We have very quick closings, so we can pull the title reports faster. Really, it's about service, right? If everything is regulated, what else do you sell on? You sell on service. That our processors have been in the business for 20 plus years. They've seen every scenario, right? It's almost Newton's law. What can go wrong will go wrong, but we've seen it and we've worked through it. So working with a trusted title company that has, I think we're 13 years in the business now in 4 different states, that matters. Look at the reviews, look at the people that we work with. We work with top agents, solo agents, top teams. But why you would work with somebody is going to be service specifically and communication. Everyone wants to get to the table, and every realtor and lender wants to get paid, and every buyer or seller wants to get their keys, right, and get their checks. But having good communication and keeping everybody looped in is paramount. It really only takes one missed email, one missed number to mess everything up. So who you work with matters, and I would highly recommend that, when you're working with a realtor or a lender, have a conversation with them, find out what their experience is. Same thing with title, find out their experience, see what they've done, who they work with. And that's kind of what I'll leave you with. I don't want to dive too deep into that. I could sell forever and say how great my company is and what we do that's might be better than the rest. But I will say, give us an opportunity and you won't be sorry that we'll do things a lot different than our competition. And we'll try to go above and beyond to help you get your business to the next level. That may not be directly for buyers and sellers, but if you're in the industry, we can definitely help you move the needle and, get from those 12 deals a year to 18, 20, 24 and start hitting your financial goals, which ultimately that's what this is about, right? We go to work to make money, to build the best lives for ourselves and our family. And I think if you give core a shot, that gives you the best opportunity to succeed.
One of the things that I always want to remember, and we're going to kind of wrap up with this, is in New Jersey, and especially in Southern New Jersey, we often close at the title company. We're not doing it at an attorney's office. Sometimes we do it at the brokerage office, but we're closing at the title company. And we've spent months with this client building a really good experience. And the last thing that they're going to do with you, maybe in person for a while, is going to be that closing table. And one thing that I'll say about Core, the ambiance that you guys have developed in that it's a nice corporate building in an easy to find location with bright, helpful, friendly staff, a very smooth, high-end feel to any type of a closing, regardless of price point. And it's always done seamlessly. It's smooth. Everybody's happy. And it puts the realtor, the buyer, the seller, the listing agent, any attorneys involved, the title closer, all in that room together. It makes it a really good experience. And it just caps off that experience you were giving to the buyer all these months, and you finish it with a quality company like Core. Anyway, everybody, I appreciate you hopping on with us today. If you want to learn any more about title insurance, I'll make sure to tag all of Bredan's information below in this video. Thank you guys so much for doing this with us. We're going to go ahead and stop the recording here. And I hope that everybody has a good day. Bye.
Thanks, everybody. Thanks for having me, Connor.